Good morning, traders and investors. My name is Shen Mwangangi, one of the best market analysts here at HFM. HFM is a multi-winning awarded broker that offers for you the best trading environment and trading opportunities. Before we start, I'd like to let you know that this is a pre-recorded YouTube video. You can go to our YouTube channel, make sure that you hit the like, subscribe, and share button. And also don't forget to comment. This will help us improve our algorithm so that we can create better videos for you as a trader and investor. Coming on today, we have the Fed interest rate decision coming up at 9 p.m. today. There's an expectation of either a hike, cut, or a hold. And as you can see, the consensus is coming at a hold. So today we'll discuss on our precious metal gold and the possible scenarios on what may happen if you have the three possibilities, which I said is a hike, cut, or a hold. Coming on also to the news, you can see also Donald J. Trump is pressuring Mr. Jerome Powell to cut the interest rates. Why is this so? Because there's a risk of recession in the US economy. So let's talk about the cut. If you have a cut, if the Fed interest rate decisions comes as a cut, we may have, number one, on the short-term effect on gold is a bullish surge. Why? This is because cut weakens the dollar and lower real yields. This will be highly supportive towards the gold, and also increased inflation fears. If the market sees the cut as premature, gold will likely spark due to fear of runaway inflation. Coming also to the long-term effect, a strong bullish case will lower rates, which is likely also to reduce opportunity costs of holding gold. Also, Fed cuts may signal broader economic weakness or crisis, which makes gold to thrive. If you have a hold, on the short-term effect, it will be mildly bullish reaction for the gold. Why? Holding rates steadily, especially amid expectation of a possible cut, can be slightly bullish for gold in the short term because it signals no additional tightening, which reduces pressure on non-yielding assets like gold. On the long-term effects, inflation and rate path, there's an uncertainty in the inflation and rate path, and if inflation persists and the Fed delays rate cuts, real rates may stay elevated, which is a negative effect on gold. However, if economic data weakens and rate cuts become, rate cuts may become more likely to lead to a long-term uptrend on gold. Currently, I would not like to talk about the hike, but this is because if we talk about the hike, there is a low likelihood of a hike happening because right now the US economy is expecting there's a risk on recession on the US economy, and the possibilities right now is either a cut or a hold. Coming on to our charts, we can see the gold has been right now we have a 2-day up move attempting to go back to our recent all-time highs at 3488.48. Again, if you have a cut, this will be good for gold, as gold people will be moving to gold because the dollar will be weakening. Coming on to the dollar, you can see we've been having uncertainties on our dollar index, and we are ranging between 99.87 and 97.79, having more than 10-day range. This signals strong uncertainty and mixed sentiment on the economy in the US. Coming on also to our stocks, we have the US 500. You can see investors and traders increased their risk appetite when trading the stocks because these are risk-on assets, and you can see we have been moving up high quite for some time, having us breaking our previous resistance zone, which we had touched more than 2 times, and now it turned support, and we are looking at the 57.54.45 as our key level of interest. And the same also has been happening on our Nasdaq, our US 100, which is our top 100 tech companies. We saw it come to our level that we were anticipating at 299.54, and at the moment we have a bounce off from that level, signaling that this may turn either to be our support, or we may have a bounce off all the way to 19 to 60.26. Coming to our currencies, our forex, you can see we've been having quite, just 1 minute, I pause on something. Yes, as I was saying, coming on to our US currencies, our dollar, euro, you can see we've been having a tight consolidation, which shows us that we have been having uncertainties also on what is happening between what is happening in the US economy. So we'll be keenly looking at our key level at 1.12774, which you have seen it acting as a major support, having it touched more than 4 times. Also having our resistance zone at 1.114394, which is also acting as our major resistance zone. Also the same has been happening on our dollar pound, having it range between 1.34171 and 1.32574, having our support zone being touched more than 3 times, and our resistance zone also more than 3 times. Again, we've been having uncertainties on majorly on dollar pairs, including Euro USD and JPY USD, and also you have seen that on our dollar index, which is our key indicator on what is happening on the US economy. So with that said, my name is Shane Mwangangi, one of the best market analysts here at HFM. HFM offers you the best trading conditions so that you can be able to trade effectively on the financial markets. Goodbye and God bless.